Hi everyone, and thanks for tuning in to another episode of Budget Investing. Today I'm going to go over two pieces of investing news that you should be aware of and how this will impact you as a budget investor. And after that, I'm going to give you some details on how to set up your portfolio and create your investing plan as a budget investor. This will allow you to be diversified and it'll help you reduce your risk going forward so that you don't need to stress every night about what's happening in the stock market. So first, let's dive into that investing news. So the first piece of news that I want to go over is the blocked ship in the Suez Canal and how this will impact you as a budget investor. This ship is stopping on average 50 to 60 ships from going through the canal every day, and the canal is responsible for upwards of 12% of the total shipping globally, which is a lot. It equates to be about $9 billion worth of goods every single day. A large portion of the ships that are traveling through the canal every day are carrying products that are related to crude oil. If they're not able to pass through here, this obviously will delay them from getting to where they need to be. So for example, if they were planning to go to Amsterdam and if they go through the Suez Canal, it's going to take them on average about 13 days. But if they have to detour all the way around the Cape of Good Hope, it's going to take them 41 days total. So almost quadruples their travel time. And if you're waiting for that shipment of those crude oil goods, there will likely be a shortage, which is going to cause the price of oil and gas to potentially drop. Now, as a budget investor, you can use this to your advantage. You can sell out of any potential oil and gas companies you're holding now and then rebuy them at a dip, or just continue to hold them, be aware that there will be a slight dip coming, and just ride it out, which is what I would recommend. Additionally, when that dip does happen, probably within the next couple of weeks or a month or two, you can buy some more of these oil and gas stocks so that you can average down your price and continue to grow your monthly or quarterly dividends. The second piece of investing news that I want to go over today is that Fidelity has applied with the SEC to launch a Bitcoin ETF, or exchange traded fund. If you want more information on ETFs and how they may fit into a budget investor's portfolio, please check out my last video as I give you a lot of details on that there. Now, for Fidelity, this is not the first attempt to launch a Bitcoin-based ETF. There have been a few other companies that have attempted this, and unfortunately the SEC has declined it in the past. So this is not a done deal. But as a budget investor, this could be an opportunity to buy into Bitcoin or any other cryptocurrency, as if this does get approved, you will likely see a rapid uptick in the value of them. Bitcoin is trending around that $50,000 to $60,000 price range over the last little while. In comparison to last year, it was around $10,000 for one Bitcoin. So there's been a huge increase in the current demand and value of Bitcoin. So there may be a higher chance that the SEC may approve this. Of course, there are a lot of other companies out there that are based around cryptocurrency, and there's been a huge boom in that field recently as the technology is advancing and becoming more practical and allowing people to use it a little bit more in their everyday life. Now, Bitcoin and other cryptocurrencies are still extremely volatile at this time. So if you're looking to reduce your risk, they may not be a great choice as a budget investor. But this news is just to, again, emphasize the fact that that world is changing a lot. There are a lot of different companies that are out there that are investing into this area, and there are more and more practical uses coming out every day. So this likely won't be going away anytime soon. So this could be a great opportunity for you to invest into the cryptocurrency world through an ETF to help reduce some of that volatility and give you a wide range of exposure to all of the different potential companies out there. Now, I know everyone's going, but Dylan, how do I set up my portfolio so that I know what stocks I need to buy, how many I need to have in each area? Now, first, we want to start off by making sure that we have at least one stock in all of the different sectors across the entire economy. So if you look at what a professional may recommend, might not necessarily fit with what you know in those particular areas or what you're comfortable with, as my particular weighting that I have in all the different sectors is a little bit different than what an average portfolio recommended by a professional. So if you were to go to a professional and have them set up your investing portfolio, on kind of their perfect world, it'll likely look something along these lines of having about 15% of your money in financials, another 15% in utilities, telecoms, and then in your energy, healthcare, and real estate, and consumer goods about 10%, technology around 5%, same with transportation and bonds. Now, if we go look at my goals for my sector diversification, you'll see that it's quite a bit different than what a professional may recommend. The reason for that is my knowledge base is just not sufficient in some of the different sectors to be able to make an informed decision on which companies will have the opportunity to continue to grow in the long term. So for me, in the technology sector or into consumer goods, I have a strong knowledge base in those areas, so I'm comfortable placing more of my money in those areas. Now, I have a high weighting in financials as well because it is a large portion of the total economy here in Canada. So I feel confident knowing that if I place my money in there, that those companies will always do well, which typically banks in any country always seem to make more money as they tend to keep up, if not beat inflation, and they always pay a strong and consistent dividend. Now, this diversification that I have allows me to kind of follow the trends in all of the different sectors. I chart closely the ups and the downs that go through them. So when there is a dip in a specific sector, I know that that's where I should be focusing my money. So recently, there's been a pretty big pullback in the technology sector. As you can see on the charts here, my 30-day, my 90-day, and my 100-day charts show a pretty significant decrease over the last little while. And of course, things are starting to pick up in the last week or so as people are putting their money back in. But if I would have timed it perfectly, I could have bought in while things were going down, and then I can benefit through that dip. Additionally, I will track the weighting of each stock in comparison to my total portfolio. I want to have each stock around that 5% mark in comparison to my whole portfolio. I don't want anything to be more than 10%. As you can see right now, Costco for me is at 10.11% of my total portfolio. So I do have quite a bit of weighting in that. So if there is a big pullback in Costco, it could have a significant impact on my total value of my portfolio. So to kind of navigate that, I would either want to sell some of the Costco stock that I hold, or in my case, because I only own two, what I'll do is I'll just focus my funds into other areas that need a little bit of catching up. So as you can see, Coca-Cola is only at about 0.7% of my total portfolio. So it's a little low. I don't want it to be any lower than about 1%. Again, I'm trying to keep things around that 5% value, but of course things will fluctuate as the value of stocks change day to day. One last thing that I will track, in just like the diversification across all my sectors, I will look at the diversification within each sector. Now, as I scroll through here, you can see, of course, I know what my weighting is across all of the different stocks that I hold in there. And I don't want anything to get too large. Again, Costco is really large in my consumer, as I pointed out earlier, but that's just because it's a very expensive stock. It's one that I think has a huge opportunity to continue making money. But it gives me that opportunity to pay attention and just know that, hey, maybe I should focus my money somewhere else. Hopefully this gave you a little insight into how to set up your portfolio so that you're diversified to reduce any risk. If you enjoyed the video today, please subscribe, thumbs up, and let me know down in the comments below if there are any topics that you would like me to go over so I could give you a little more information and help you as a budget investor grow your money. Otherwise, I hope to see you in the next video.